Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power, and with me today are Steve Crewdson from JD Power. Welcome, Steve. Scott Quarderer, also with the company. Welcome, Scott. And Mark Garrett, also with JD Power. Welcome, Mark. Thanks, everybody, for joining us today. So for today's podcast, we wanted to do a look back at the year 2024. We're here in November. We're close to Thanksgiving. A lot of water under the bridge at this point. And so why don't we hit this kind of topic by topic? I think first, the big story for the property and casualty insurance industry in the U.S. for 2024 was return to profitability. So Steve and Scott, I don't know if you guys want to take this one. Why don't we start with kind of what happened? Why was the industry not profitable for the past 2 or 3 years? And what changed so that the industry is coming back? And then we can talk about what the implications are.
Yeah, I'll jump in real quickly here, Scott. Why the industry wasn't profitable was the cost to pay out claims went up much faster than insurers were able to keep up with the rate increases. So unlike an example we use a lot, like a gas station, you can drive by in the morning and you'll see a different price in the afternoon. Insurers can't move their prices like that. They need a lot of time to move their prices. So as their cost to pay out claims went up, there was a lag in the time it took insurers to respond to that and increase their premiums. So what we're seeing now is that they've essentially caught up to the increases in claims costs, while, if anything, some of those cost pressures have been reduced over the last 12 months, and while rates have been continuing to go up. So now we're starting to see insurers catch up and reach what we've been calling, as an industry for the last couple of years, rate adequacy. And rate adequacy has largely been achieved by most insurers at this point.
Yeah, I would add to that. I mean, Steve's exactly right. So kind of post-COVID, what we saw was a really large increase in severity and frequency for claims, and pricing wasn't at adequate levels. So the profitability took a major hit, particularly for those carriers that had a large auto insurance focus. You know, Geico would be an example of someone who's a little bit more of a monoline carrier. So they definitely took a little bit more of a hit financially, as did many of the larger carriers. Fast forward to now, we're seeing more stabilization in terms of claims activity. We're seeing certainly much higher auto insurance rates. And we're also seeing premium growth, year-over-year premium growth for the industry. So those things have kind of smoothed out the financials and the profitability for the industry.
All right, thanks, guys. And we are going to do a follow-on podcast for predictions for 2025. We'll do that one next. So I think that this return to profitability has a lot of implications for what's going to happen next year. Story number 2 for 2024 has been shopping. So Steve, you lead our shopping study and do a lot of work with our list program, our intelligence program, where we interview thousands of insurance shoppers every day. What are we seeing today compared to what we normally see? What's kind of behind that, and what are the implications?
Yeah, that's a really important story. I think that we'll be talking about when we predict 25. But for today's purposes, I'll look back over the last couple of years. And if you think about the first half of 2023, we saw shopping really start to move up, and we saw at that point record highs in our list data of shopping. But where consumers were struggling was they were out looking for a lower price premium, but they couldn't find it. So they weren't switching as much. And they basically took the second half of last year off from shopping. We saw shopping fall down in Q3 and further down in Q4. So this year, when we saw an increase again in the first half, we weren't that surprised that consumers are coming back to shop in the first half of the year, because it's a behavior they exhibited the year before. What was surprising is in Q3, we saw still elevated shopping. And in fact, the September monthly shop rate was the highest monthly shop rate we've ever had in the list data series. So along with that, it's different. The pattern's been a little bit different than in the past, where in the past, generally when the shop rate goes up, the switch rate goes down. So what you're doing is you're seeing more of the passive shoppers enter the market when the shop rate goes up prior to the pandemic. You think about the last 15, 20 years. Lately, you're seeing really the active shoppers are really looking to switch carriers, really entering the market now as the shopping rate goes up. So switching has moved up. Part of that is driven by the fact that consumers now can find a lower premium. Some insurers have really taken a break on rate increases. Some are even discussing targeted decreases for the right customer segments. And that's led to a number of consumers able to find that lower premium and switch. So we think that as word spreads, more consumers talking about I've been able to shop, find a lower premium, that's going to continue to drive more shopping and switching in the marketplace. And what we're seeing thus far in Q4, we're almost 2 months into Q4, we're setting up for a new record high thus far in Q4 with shopping rate. So consumers are the word spreading that consumers can find that lower premium, and there's a lot of pent up demand to go and switch carriers after the last few years of rate taking. So we're really seeing that come to play right now with a lot of shopping and switching in the marketplace.
Okay, it would be interesting to see where your predictions go for next year, Steve, when it comes to these shopping levels. Story number 3 is the rise of trust. So, Scott, we redesigned some of our studies, especially for the auto insurance study, looking at kind of new factors, new drivers of customer satisfaction. And I think one of the things that really emerged from this year's auto insurance study was trust being either number one or close to the top in terms of a driver of customer satisfaction. So what do we mean by trust, and what do we think's behind this?
Yeah, you're exactly right. So, as we measure trust now in our annual auto insurance study, which is our flagship study that measures basically auto insurance customer satisfaction for all the major carriers, trust, if I trust my insurance carrier, that is the most important touch point, my evaluation for that auto insurance experience, even more so than price. We talked about price, up front, about profitability. So it's the number one thing that I will place emphasis on in terms of the overall customer experience. And if I have a high level of trust, I'm much more likely to renew that policy. Certainly going to be less sensitive to price increases. One thing, one of the reasons it's important is that this is an industry that's had, definitely some bumpiness the last couple of years, obviously because of the profitability concerns. There's been massive, significant rate taking. Steve mentioned up front, because they had to kind of get back to profitability. And for that reason, there's been less trust with some of the insurance carriers in the industry as a whole, just because the rate taking has been so high. We do see, for example, that only about half of customers trust their insurance carrier right now, as per our auto insurance study. That's significantly lower than other industries we measure at JD Power, like banking, for example, is much higher than that. I trust my bank much more so than I do my insurance carrier. Some of the things the insurance carriers can do is just to be much more consultative, communication oriented in terms of things that are changing. So if I did get a rate increase, why did that happen? Was it because maybe I changed coverages, or were there other factors? The carriers can also be much more advisory in terms of how to maybe improve situations in terms of different coverages and pricing. But trust is certainly very important right now. We see that it's it's definitely an area for improvement for the industry as a whole, and something we'll be tracking very closely the next couple of years within our auto insurance study.
Yeah, thanks, Scott. So Steve, just one kind of follow up on this when it comes to agents. We know that in a rising rate environment and elevated levels of shopping and switching, the agent's job is kind of harder than ever. So what role do agents play when it comes to trust, and how are they doing?
Yeah, agents have really had a hard go of it over the last couple of years. As you mentioned, Mike, the increases in shopping. If you're an independent agent, you're likely going to be shopping proactively on behalf of your customer. We've seen in our independent agent study, independent agents much more likely this year than in years prior to say, I've actually gone out and proactively shopped for my consumer to find them a more competitive premium before I presented them a renewal document and the new price. And agents have a really important role to play in building that trust. So part of that is, I'm finding you a more competitive premium. When you think about an agent, they really play multiple roles for the customer. They're an advocate for the customer. When a customer has a question or they don't feel like they're getting the right service from the carrier, like when Mark talks to claims, we know that independent agents and captive agents, they traditionally don't get very involved in a claim, but when something's going wrong from the customer's perspective, the customer looks to them to be an advocate and get involved in the claim. So that can help build trust. They're an educator. They're helping the customer to understand the policy coverages that they're buying, the other coverages they could buy, and the things that are kind of the gaps in their coverages if they have any. and they're really helping just the customer overall with making sure that their needs are met within the insurance space, and that can go a long way to building trust. And we see that carriers themselves can help enable agents to do a better job of that. In our independent agent study, we see that there's a number of different ways that a carrier can help the agent grow their business, build trust with customers, better serve customers. And in fact, in that study this year, we were surprised, given the background of consumers having some real challenges with their insurers and the negative media around this space. Independent agents were more satisfied than ever before with the commercial lines experiences they've had. In fact, on the personal line side, they were just as satisfied as last year, and last year was a record high. So we kind of tied a record high in personal lines relationships, and we set a new high in commercial lines relationships. This year was the first year that agents were more satisfied with their relationship with the carrier on the commercial side than on the personal line side. We've been doing this study for a number of years, and it was always the case that they were more satisfied in their personal lines relationships. This year, commercial lines took the lead. So really good story there from the agent side in terms of their relationships with carriers and their ability to help build trust with that end customer.
Thanks, Steve. Mark, for story number 4, we're going to move to claims. It looks like we took a vote and we have kind of a tie between the top 2 claim stories for 24. So on the auto insurance side, it looks like digital is starting to get some traction for the first time in a while for auto claims. And then on the property side, big kind of down year in 24 compared to the number of disasters we had in 23.
Yeah. To start on that latter point you just made, I think that was also one of the big drivers to bring that back to our upfront conversation on rising costs. And it was a really tough year. 23, I mean, set a record for the number of those billion-dollar events. I mean, I think there was 28 of them that obviously contributed, to a great deal of the losses. Unfortunately, we're seeing a little bit of an improvement so far in 24, but we're still above those normal levels. I think there's already been 22 or 23 events this year where we had been averaging about 20 in the last 4 or 5 years. So, 24 is maybe a little bit of relief, but there's still been, quite a few big storms coming through. Just another comment to make that I think is interesting. If you think back to what Scott was commenting with trust and how important communication is, right, and being consultative there. I mean, we certainly see those elements play a big role in claims as well. I mean, that's really, you're using the product. You got to trust that the carrier's, making the right decisions, has your interest in mind, things like that. We see trust really be a big driver in auto claims as well. And to me, when you touch on communication, that's the biggest issue we see with customers, right? I mean, all of our top KPIs across, whether it's our digital experience study or our auto study that we just released, both of those, I mean, communication is, the top KPIs in those studies. And what it does, it just shifts, right? So from our general auto claim, you got to be easy to communicate with. You have to follow up timely. What we see a difference in those studies is you got to follow up timely when they're calling you in auto claims. And in the digital study, it transitions to email and text, right? You got to be accessible, available, return calls quickly. One thing we see in the data is that gets trickier as claims take longer. So one thing that we saw in terms of maybe a bright spot or maybe a hopeful look of where the industry is going is we've certainly seen some relief. If you look back at the 23 kind of calendar year claims versus 24, we're seeing some big shifts in terms of some of those delays. Like some of the biggest delays in the process early on were just parts availability, shop backlog, being able to get your car into a shop quickly. We saw that spike at almost 6 weeks. Early 23, where now it's trended down for 6 or 7 straight quarters since that peak. So we've seen the most recent results from surveys we've gathered. Shop backlogs more around 2.5 weeks. It's even shortened since then. So I think they're back to almost those pre-pandemic levels now, where it's about 2 weeks to get your car into a shop. So the fact that that's happened and it's going to pull down some of those really long-tailed claims that are taking 3-4 weeks on average, all that's going to get reduced. And we've seen it in our data where the results we gathered in calendar year 24 we're trending up. SAT's going up a little bit. We're rebounding from a really tough year of 23. So I think that's a real positive sign for the industry. I think we're going to see some relief, hopefully with these next results that we're publishing. And maybe the last point is just how much we've seen digital really be a focus point of insurers. I mean, a lot of investment into mobile apps. Making like we saw a big change, just even that early reporting process, right? Reporting that FNOL, we see a lot of investment into kind of revamping those tools and certainly marketing around that, right? So a lot of messaging, promoting people use these digital channels to start the claim process, and hopefully then they stay in channel and have an experience through those digital tools. And we found those actually are being really well received. I mean, one of the headline comments we saw, I think this year, is just that the digital experience now is outpacing that traditional phone call into a call center to report your claim. We're seeing actually higher scores, and yes, they may be simpler claims that are more prone to go to digital and stay in digital. But the fact that they're achieving higher satisfaction than talking to someone early in that process really speaks to all that heavy investment to make that a more seamless, efficient process for customers. So they're really responding well to that.
Okay, thanks, Mark. So those weren't all the stories, but those were the top stories related to customer experience and customer satisfaction from the J.D. Power point of view. Steve, Scott, and Mark, thanks for joining us today.
Yeah, thanks, Mike.
Thank you.
Look forward to the predictions for 2025 that are coming up. And we want to thank our listeners as well, and we'll see you next time.